trading has become more accessible than ever thanks to an innovative secret trading view indicator. This powerful tool has been tested on various charts, and we've identified the best settings to create a profitable trading strategy for traders of all experience levels. So, to get started, head over to the TradingView.com and open any chart of your choice. That's right, any chart will do. For this demonstration, we'll use Gold 5-minute chart. Once your chart is set up, follow these steps. Click on the Indicators tab and search for the Envelope Multi-Type Indicator. Locate the indicator in the search results and click on it to add it to your chart. The envelope multi-type indicator displays upper and lower envelopes around a basic line, which is essentially a type of moving average. These envelopes are set a certain percentage away from the basic line, helping you visualize potential support and resistance levels. Now that the indicator is on your chart, you can fine-tune the settings to match the optimized configuration we've discovered. Alright, now let's dive into two simple methods for using this awesome indicator in your trading strategy. First up is the price breakout method. Keep your eyes peeled for when the price jumps above the upper line. That's a bullish breakout, folks. Time to buy and jump into the trade. On the other hand, if the price slips below the lower line, you've got yourself a bearish breakout. That's your cue to sell and get in on the action. Next, we have the midline method. Watch out for the price breakout through the midline and heading upward. That's another bullish breakout, signaling it is time to buy and enter the trade. But if the price breaks through the midline and goes downwards, you've got a bearish breakout on your hands, telling you it's time to sell and dive into the trade. Now let's chat about the importance of trading with the trend. Following the trend is like going with the flow. It shows you what's happening in the market. So, to help you spot these trends, we've found a killer-free tool, the Donchian Trend Ribbon. This baby can be a game changer for your trading game. Now, adding the ribbon to your chart is a piece of cake. Just head on over to the Indicators tab on TradingView.com and then search for Donchian Trend Ribbon and give it a click to add it to your chart. Easy as pie. But hold on your horses, there's more. To make the most out of Donchian Trend Ribbon as a trend finder, we've got to tweak the settings. So don't worry, I'll walk you through it. Now that our indicators are all set up, let's get down to business and talk about how to jump into a trade, set a stop loss, and aim for maximum profits. First, we're on the hunt for a buy trade. Keep your eyes peeled for a bullish breakout signal, which could pop up either the midline or the upper line. Once you spot one on the chart, remember to make sure you're trading with the market trend. Take a quick look at the Donchian trend ribbon. If the histogram is green, that's an uptrend. So if both signals check out, you're clear for takeoff. Open the buy trade. Next, it's time to set up your safety net, the stop loss level. We've got two choices here. Pick the resistance swing low or the lower line of the envelope indicator. And last but not least, let's set a target for your trade. Here's the handy trick. Aim for a take profit level that's 1.5 times the distance between your entry price and a stop loss level. This will help you lock in those sweet profits. And when it's time for a sell trade, keep your eyes open for a bearish breakout signal, which might appear from the midline or the lower line. Once you catch one of these on your chart, double check that you're trading in sync with the market trend. Quickly pick at the Donchian trend ribbon. If the histogram is red, you've got yourself a downtrend. And if both signals are a go, it's time to pull the trigger and open the sell order. Now it's time to secure your position with a stop loss level. You've got two options. Select the recent swing high or the upper line of the envelope indicator. And finally, set a target for your sell trade. A good rule of thumb is to aim for a take profit level that's 1.5 times the distance between your entry price and a stop loss level. This strategy will help you lock in those tasty profits and minimize your risk. Don't go just yet. We've got another video lined up that's packed with even more game-changing trading insights. Don't miss out on the opportunity to take your trading skills to the next level. Click on the recommended video now to keep the momentum going.